GBP USD settled into a defined range after UK CPI data came in close to expectations, with resistance near 1.275 and support around 1.265. The GBP USD range angle matters because the important part is not the range itself, but what can force it to break. The tension is whether currency range turns into a durable change or simply a sharp data point. That is why the first read should stay close to the confirmed numbers: 1.275 resistance, 1.265 support, and the immediate checkpoint around 100 pip corridor. For a market structure story, the useful readout is how capital, liquidity, rates, or risk appetite changes after the first move. The reason to keep watching is that the next checkpoint can change the meaning of the first move. The confirmed frame is that the setup reflects a roughly 100 pip corridor, while inflation and central bank expectations remain balanced enough to block a clean breakout. The key baseline details are CPI 4.6 and core 5.7, which give the story scale without requiring speculation. This scene grounds the viewer before the mechanism takes over. If the baseline changes, the rest of the story changes with it, because the consequence depends on whether those confirmed details keep holding. The most important baseline split is between what is already visible and what still needs confirmation from the next public signal. That scope keeps the segment focused on the mechanism that actually changes outcomes. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The structure matters because range trading works when buyers appear near support and sellers appear near resistance, but false breakouts can punish weak risk controls. That is the working engine behind GBP USD range, and it explains why the event cannot be read only as a surface move. In this case, the mechanism connects 1.275 resistance with 100 pip corridor. When that connection weakens, the story becomes less about the initial number and more about whether the system, market, or policy process can absorb stress. That mechanism is the reason a viewer should watch process quality, not just the largest number in the story. The pressure reaches the pound's range affects dollar liquidity, global risk appetite, and macro positioning that can spill into crypto markets. For viewers, the useful question is who actually has to react: users, traders, issuers, regulators, operators, or institutions. Here, GBP USD sits at the center of that reaction, while sterling traders shapes the next practical step. The consequence is strongest where the event changes access, trust, liquidity, compliance planning, or the cost of making a decision. That makes the impact measurable through behavior, not through hype around the topic. What is not proven yet is the range does not say which side wins. It only shows that traders are waiting for a stronger economic catalyst. That limit matters because the confirmed facts do not automatically prove the most aggressive interpretation. The safer split is to treat 1.265 support as established context, while leaving the unresolved part open until a stronger signal appears. That keeps the story useful without turning a partial data point into a conclusion. The open point should remain separate from the confirmed facts until a filing, market move, patch, data release, or official action closes the gap. If later evidence changes the read, the story should adjust around that evidence. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The move to track is the next signal is whether UK growth data, Fed minutes, or US inflation breaks the 1.265 to 1.275 corridor. For GBP USD range, that is the point where the story either gains confirmation or stays stuck as an unresolved market, policy, security, or adoption question. The practical readout is to follow 100 pip corridor alongside the supporting details, RSI near 52 and 1.275 resistance. If that next signal arrives, the story moves. If it does not, the only confirmed position is the one already visible in the evidence. The viewer should leave with one concrete checkpoint, not a prediction about where the market or policy process must go.